Caroline Woods joins us for a look at AppLovin, stock that got a lot of lovin' for a while, Caroline, but then got some fresh hate from Muddy Waters after this epic run from less than $10 to 500 in the course of like 18 months.
Hey there, Oliver. Yes, it's been getting a lot of hate from several short sellers. I think this is at least the third that we've seen in the past month or so. And AppLovin trying to rebound from those losses after Muddy Waters' short report yesterday. Shares are now up about 5%. So they were up as much as 10%. So struggling to hold on to those gains, but in positive territory. The best performer on the NASDAQ 100 today, but obviously being offset by the likes of Lululemon and Strategy and Palantir and whatnot. In terms of that short report yesterday, Muddy Waters Research raised concerns about its digital ad technology. They alleged that AppLovin is misappropriating data, violating App Store rules. More specifically, they said they're impermissibly extracting proprietary IDs from companies like Meta, Snap, TikTok, Reddit, and Google as a way to target ads without user consent. They said if App is not deplatformed, logically numerous competitors will start copying App's techniques because there is little technology involved. Now, the company's CEO did address the short report in a blog post yesterday saying, our business is technical and we get it. It's not always easy to understand. He went on to say this complexity leaves room for short reports to stir fear and doubt. To investors, I'd say this, dig deeper. Given the AI tools available today, it's easy to discredit a short report like this in minutes. So they go on to address some of those metrics that the marketing world uses its own vocabulary, if you will. I have seen a few analysts weigh in on this as well. They were bulls before, and they're maintaining their bullishness and their pretty hefty price targets. Following this, I saw Wells Fargo reiterate an overweight rating and a $538 price target. Says its checks indicate that AppLovin's e-commerce incrementality, which is a kind of a marketing term that measures the actual impact that a marketing activity has on the key performance indicators, is strong. I saw Loop Capital say accusations of faulty conversions and fraud are easily disproved by speaking with performance marketers and measurement companies. They're confident in the platform that it's driving excellent performance. So they kept a buy rating and a $650 price target, the highest price target on the street. And then Benchmark addressed the blog report or blog post from the CEO saying the message was clear. AppLovin's success is rooted in sophisticated technology and operational rigor, not opaque or unethical practices. So they have a buy rating and a $525 price target. If you take a look, almost 80% of analysts maintain their buy ratings on shares. The median price target's $550. AppLovin's had a tough start to the year. Shares are down about 16% year to date, almost 50% off the highs, but still a pretty impressive one-year chart. Shares up about 300% over the past 1 year.
Wow. I know. I never really like when you hear the CEOs say stuff like, "You don't understand our business. It's so complicated." I don't think it's that complicated. We've had them on before. I didn't find it. I mean, if you're not involved, then it kind of seems distant to some extent. But it's not that complicated on what they've been doing and how. So, but however, so that to me is not that the shorts are wrong. It's more just like I'm sure that they've figured it out. Like Carson Block and his team are very smart people. They're very capable. These people have dug up some of the craziest schemes in China and stuff. I'm pretty sure they can figure out AppLovin's business model.
Well, right. But we've also seen shorts go after other companies that have proven to be, I think Carvana, I think Palantir. Obviously, Palantir is not necessarily doing as well as it once was. But I think that, I don't think that their only excuse was our business is complicated. They actually do go into and break down kind of the metrics and such in this blog post. I will say it does seem complicated to me, even just some of the lingo and vocabulary. So I can't say that I completely understand their business model, but I'm not the one shorting and I'm not obviously the one running the company. But it seems like analysts certainly maintain their bullishness based on their conversations and based on what the CEO had to say. And it does seem like investors are trying to regain some optimism in shares following that steep 20+% sell-off yesterday. That being said, shares are only up about 4% right now, so we'll see if they can hold on to any of those gains. But yeah, it'll be interesting to see how this one plays out. And basically to Muddy Waters' point, if they're saying basically their business model can be easily copied and they could easily be dethroned then. So let's see if that happens.
Yeah, and that part, I mean, I think does speak to the kind of nature of their understanding, because that's definitely true. I mean, they're kind of like living around the edges of some of the big high auction advertising platforms to try and pick up customers to get them get their ads in the right placement. So I mean, it's kind of like being a prop shop trading against big market makers. Like, yeah, it's possible. There's a market in that. People do that for a living, but it's very tough, and you're kind of swimming in the leftover current to some extent. But as they've grown more, I think that's why the price has gone up a bunch too. Is that they've apparently been able to find some pretty big customers and stick with them. So, yeah, we'll see. But obviously, the stock price has been crazy, and it still trades at like 60 times or something huge, something enormous. So, yeah. All right. Thanks, Caroline. Appreciate that. Let's trade with Dan Deming, managing partner, KKM Financial. What do you think, Dan? This is a tough one.
This is a tough one. Absolutely.
It's a fun one, though.
Yeah.
I mean, the thing went crazy.
Yeah, it did. From basically November through the beginning of this year, it went crazy, and we hit some pretty lofty levels, and now we've been pretty much almost cut in half. I think the jury's still out on this stock. This is a very tough one, as you pointed out. I mean, extremely high implied vols, but also just a lot of uncertainty surrounding this name, and a lot of decision makers on both sides of this thing. You've got, as you pointed out, some of the analysts, still have these lofty levels, and then you've got short sellers and other things involved. And I think your point about the prop shop versus the large market maker analogy is really solid in this case.
Thanks.
Because, yeah, I do. Because, I mean, I as going through that over in my time as a trader, there is, the efficiencies in the market tend to find, the bigger players. And if they're just a peripheral player, if their market doesn't have a moat around it, their operation, then they certainly could be vulnerable to further deterioration as far as exposure to this market. So I'm cautious on this, Oliver. My trade example today is very short term, 20 days out, April expiration, looking for further downside, honestly, and basically looking for a range to the downside. So today's trade example is just buying a put 1x2, very wide and out of the money, in case we do see further weakness. And the strikes I chose in April were the 250 and the 200 put 1x2. The break even on this is down around 155. So again, I think at that level, that's where really the November break to the upside started. Possibly think about getting long down there. But at this point, I still think the jury's out, and this gives you the opportunity to participate should there be further weakness.
Okay. Interesting. So looking, today the little bounce kind of gives you an opportunity, I guess, for entry in this type of trade.
Yeah, it does. Actually, now that it's trading a little higher than what I looked at initially for this trade example, it's a little cheaper. It was $8. Now it's down around 7, maybe 6.5. But so it does cost a little bit to put this out there. So that's something to consider when you evaluate this. But nonetheless, it creates a large capture zone to the downside. And if we see a further break, if this is the best it can do to try to come off of those recent highs, and we did see the pop and now the big sell-off again yesterday, a little bit higher price action today, but in theory that's a lower high, and then if we make a lower low, it certainly could work its way back below 250 and possibly even below 200 in the next 3 weeks, really, when you look at the price action, particularly if the market continues to sell off. So this is a way to participate to the downside, reduce the cost of the exposure by selling the extra 200 put. But again, the break even on this is in the 155 to 157 level. That's a level where if you think about having that extra put out there to get long the stock down there, maybe that's a more compelling level.
Okay, yeah, fair enough. So looking open to being in it just for a cheaper price.
Way cheaper.
Yeah. All right, I can appreciate that trade. Up 3.5% on a down day for stocks, but also off the overnight strength. We're fading as we speak. Bonds are like running away with it, Dan. The bond market, I feel like, is telling us equities still have downside this morning left ahead of them because rampant treasuries is big.
Yeah, it sure feels like it. And now the staircasing lower after the news and end of the quarter, I think price action is been a driver the last couple of days and looks like further today. And there's now, as we inch closer to the April 2nd deadline, I think the market is underpricing the possibility of the impact of that. And it does appear that now it's the reality slowly setting in that we might not getting any adjustments to that as we cross over that threshold next week. And if that's the case, then it does appear that valuations are going to be called into question, and economic activity is going to be called into question. And I think that's another factor why we're seeing that price action today. As you pointed out, Treasury's going bid time. Gold continuing to firm up and move to new all-time highs as well. So you're seeing a lot of defensive positioning unfolding here now that we're closing out the quarter and moving towards that threshold.
Yeah. Ouch. Lows of the morning here, plumbing them, and market's pretty rough. Dollar now down 30 bips, just smashing right through that 103.75 again.
Yeah.
Looks like that's not holding this morning. All right, thanks, Dan. Appreciate the trade and AppLovin. Okay.